Hi, and welcome to Leavitt Brothers tutorial on cup and handle patterns. Cup and handle patterns are powerful and reliable continuation patterns that form in uptrends and therefore have bullish implications. Their completion signals the end of a consolidation period and the continuation of the trend. Let's go through the sequence of events that unfold as a pattern develops. After a nice rally, preferably in solid volume, the stock begins a long drawn-out correction. When the pullback begins, many stockholders decide that after such a nice move, they would now like to take profits up near the high. There were also many late-to-the-party buyers who bought at the peak, and as the stock starts to drop, these stockholders have one thing on their mind: to get out even. These two groups will create selling pressure when the stock regains strength. Weeks or perhaps months later, when the stock trades close to the first peak, stockholders jump at the opportunity to start selling. Thus, a second pullback begins, and a trend line can be drawn through the two peaks. This second pullback is very healthy and normal for a strong stock, or a stock that is regaining its strength. Since stock movements have a large psychological component to them, it's unlikely the stock would enjoy any type of rally as long as there exist many disgruntled stockholders. It takes time to weed out these weak links. Once enough time has passed and the handle forms, the stock is free to move higher, for there is now an absence of stockholders who will sell at the first good opportunity. The trend line should be flat or slightly downward sloping. Cup and handle patterns usually take several months and sometimes a year to form. The best patterns possess a decent amount of symmetry, with the right half of the cup mirroring the left half, and the right half of the handle mirroring the left half. But while it's nice for a pattern to have a smooth, even balance, it is not absolutely necessary. Also, it's important the handle not go below the midpoint of the cup. Theoretically, only the selling to satisfy the people who want to get out near the previous high need to take place, but if the stock drops below the midpoint of the cup, it is a warning that more selling is taking place than simply a handful of panicky holders. It is not unlikely and perhaps common for two handles to form, so anticipating the breakout and entering a position early is not a good idea. This is healthy for the stock and is simply an indication that a little more work is needed before attempting to break out. The same breakout requirements govern as with other breakouts. Volume must surge to validate the breakout, and appropriate management strategies shall be implemented if volume is not satisfactory. There are a couple methods used to determine the expected price movement. 1. The move is likely to equal the depth of the cup. 2. The move is likely to equal the move into the pattern. The extent of the advance will often depend on the overall market. A strong market will help greatly in achieving a more ambitious price target, but in a weak market, a trader should be happy with a moderate advance. Let's look at a couple examples to highlight these concepts. Here's CSX. The stock rallied nicely prior to forming the pattern. The handle didn't go below the midpoint of the cup and volume was steady for several days during and after the breakout. The depth of the pattern accurately determined the area the stock would run out of directional energy. HEPH. The stock more than doubled prior to consolidating in a cup and handle pattern. Volume was strong in the breakout, but before the pattern could fully play out, the stock pulled back to test the previous resistance area. This is nothing to be concerned with. You can't expect every breakout to rally hard right to the target. It's perfectly normal and acceptable for a stock to do some backing and filling after busting out, and in this case, the move into the pattern did a good job determining the target. Here's Separacore. Nice smooth cup and handle pattern that got a one-day volume surge before pausing and then continuing up. The depth of the pattern accurately identified an area the stock would run out of directional energy, while the move into the pattern projected a level that was nothing more than a brief stopping point. Remember, targets are just estimates. They give you a frame of reference to work from. How far a stock moves is more dependent on the overall market strength and forces unknown to the actual pattern. West Marine. Big move into the pattern. The handle easily held above the midpoint of the cup, and volume picked up during and after the breakout. The move into the pattern accurately identified a level the stock would run out of buying pressure. Let's quickly go through a few more. We find it helpful to look at successful pattern formations to train your eye. GSIC. Solid move into a textbook cup and handle pattern which resolved up in the direction of the trend with a big surge in volume. Pacific Sunwear. Not a very smooth pattern, but the handle held the midpoint of the cup and volume picked up nicely upon breaking out. XOMA. Here's one with a slanted trend line. Volume surged on the breakout, and the move into the pattern did a good job setting the target. That wraps up this tutorial. Again, cup and handle patterns are pauses within uptrends and should see a significant increase in volume upon breaking out. The extent of the advance will often depend on the overall market. A strong market will greatly help in achieving a more ambitious price target, but in a weak market, a trader should be happy with a moderate advance.